Is Coinbase building a high-level base here that's going to be the foundation for the next leg of the campaign, or does it need a deeper flush before real sponsorship can return? I'm Brent with Trade Therapy, and welcome back to the Trading Couch. This week in Clarity, we spotlighted Coinbase and really focused on trying to answer that question, not just for Coinbase, but for the overall cryptocurrency complex. Before we get into the charts, a quick disclaimer: this video is for educational purposes only. It's not investment advice. Trading involves risk, including the risk of loss. Always trade according to your own plan and your own risk tolerance. Full disclosure, we have no position in Coin. On the monthly, Coin doesn't look like a stock that has completed its campaign. It has completed a very impressive impulsive structure coming off of these lows in 2022, all the way up to set a new high. But what we don't see is a real clean cup and handle pattern anymore. We see multiple reaccumulation type pauses. And that's really reflective of a very sentiment heavy stock that institutions don't typically move in a straight line. They pause it, they test the lows, they shake out confidence, they clear overhead supply, and then they test whether or not buyers are going to step in and defend these higher ranges. The February hammer candle was a good example of that. The price was driven sharply lower into a really thin part of the volume profile, but then you see buyers stepping up with urgency. You see the high volume show up and push price up, creating this hammer candle. But March has a very different feel. With just a few days left on the monthly candle, you see the inverted hammer that's forming, and this really looks like a two-way auction happening. When you see this type of behavior where institutions are clearing out both sides of the trade, that usually indicates range-bound activity where sellers can really lean on strength and bring price back down, but buyers are also stepping in and buying up weakness. So that sounds like range-bound behavior, and that's really when Wall Street uses a lot of headlines and really likes to create a lot of chaos, because this is generally where they're looking to conduct a lot of business. So the monthly says Coin is still in a constructive larger campaign, but it does look like we're seeing a range-bound condition forming. If we jump over to a lower time frame, we're going to start with the weekly chart. That will start to become more clear. On the weekly chart, what we see is Coin has already come off of these highs hard enough to really do damage to the overall trend and shake confidence, but it hasn't really come through and done a deep flush underneath these prior lows. And so when we look at the question of whether or not Coin does need to come down and take a deeper flush, what would that target look like? What would that area look like? And where we begin with that is we take a look at our volume profile. We see this big gap right here. We talked about how price will seek out these thinner portions of the volume profile as Wall Street is hunting liquidity and looking for stop losses. When you see a thin area within a profile, you see these lows, you see this pocket in a market structure down to this previous low. There's not a lot of activity in there. That is typically where retail investors will place their stop losses, and that's generally where Wall Street will look to take price. The second thing that really jumps out, if we're trying to identify where the potential target would be for a deeper flush, we flip over our Fibonacci and use a 0 at the top and a 1 down at the bottom, and we look for a 50% retracement. It's very common for assets to retrace 50% of their previous run. That takes us right down into the very thin part of this volume profile. Of 50% retracement would be right at 118. And so that really stands out as an area that we would want to keep a very close eye on. If price were to push down here, it would undercut all three of these lows. It would come down and take out liquidity associated with this very thin profile and really take out a lot of stops and put the coin and put those shares in much stronger hands, which is really what we're looking for as a sign that the next leg of the markup campaign is going to begin. So the weekly does not say failure. It says cleaner institutional path would be taking a dip lower before it moves on. So it does indicate that we may see one more flush before the next campaign is ready. So the question is Coin going to form a range bound or traditional institutional accumulation phase here? Are we going to see a Wyckoff spring undercut this range? So if we jump over to a fully annotated weekly chart, not to make a prediction, but to prepare based on the weight of evidence. We can see that coin has already completed one major accumulation to markup stage before pulling back here and leaving us with that question on whether or not we're going to see a traditional accumulation range develop here with a Wyckoff spring that would conveniently complete this three-wave corrective cycle. That would be the bottom of wave 2, setting up for wave 3. So if you think about the weight of evidence that we're gathering, we just talked about the thin volume profile pointing to this level. We talked about the 50% retracement of wave 1 pointing to this level. We now see a corrective wave structure that would be completing at this level as well. So all of these things really pointing to the completion of a correction and the deep flush that may be the precursor for and set up the ideal conditions for the next leg in the markup campaign, and giving Wall Street and institutions what they want, which is creating chaos. So if they're looking to accumulate as much of this asset as possible, pulling price down into that area will create the most liquidity and makes the most sense from a logical standpoint. If you look at it from Wall Street's perspective, they're trying to accumulate as much of this as they can. They're trying to flush out all of the weak hands and transfer those shares into stronger before they fund their next markup campaign. So if we jump over to a daily chart to really focus in on this range that is possibly developing, again, all of our weight of evidence is pointing to a new lower low. The first thing we look at when we're looking for an accumulation structure developing is a selling climax on stopping volume, followed by an automatic reaction and a secondary test, followed by an upthrust that sets the lower end of the range with the higher end of the range. This is a speculative path forward. This is our best guess, not based on the levels. We've got a lot of evidence pointing towards this low in this 118 to 120 area. But this date line could happen sooner. It could happen later. It's just how we're going to be trading the range. So an upthrust into the preliminary supply range right here typically sets the higher end. At this level, we're going to be selling calls. We're going to be taking short positions. We're going to be reloading on weakness for the short side of the trade until we see an ST and B set. When we see the secondary test in phase B set, we're going to be selling puts and flipping to the long side. We'll change our short positions to long positions until the upper end of the range is tested, which is the setup for the spring. At this time, we'll be selling calls and flipping back short. Then as the spring is set, hopefully within our target range, we'll be considering flipping back over to the long side and taking our position for the next markup campaign. So keep an eye on the boundaries of this range. That will tell you the landmarks to look out for. We are looking for this secondary test to be undercut. Then we're looking for the top of the range to be tested but not breached. And then we're looking for a lower low to come in here. If we see this extend out higher, we'll have to reassess our evaluation. If we see this low come much lower, that will also invalidate and have to reassess that. But based on the weight of evidence that we gathered, not only in all the charts from Coin, but in the cryptocurrency complex, we do believe we're going to see a lower low develop here, which would set the bottom for wave 2 and set us up for wave 3 and the larger markup campaign to continue. So as far as exactly when that's going to happen, that's anybody's guess. We're going to have to let the chart develop. Price and volume will tell us when that next leg of the markup campaign is about to begin. Hope everybody enjoys our spotlight on Coin this week. No clarity next week. I'm traveling abroad. I'll be back the following week. That's all the time we've got for Coin. We'll see you back here on the Trading Couch next time.